Welcome to Wizards Institute, the #1 community to learn smart investing and financial independence.
Right. Hello, everyone. So I'm Josh Awad. I am an LP in this Clearwater deal, and I'm just kind of play host here and ask some questions as we go through, and we'll open it up and have an interactive session towards the end here. So just a little bit about me before we kick off, and then I'll introduce San and Anthony. So I am an active investor in Florida. I have a portfolio of single family properties, short-term rentals, an LP in a number of multifamily properties, and GP in a multifamily with San that I'll also share a little bit about later. Spend time between Florida and Germany, where my wife is from. We're actually currently in Waikiki Beach. Let me see if you guys can see that out the window there. So enjoying our time here, but happy to spend the evening with my early afternoon, your evening together here. So without further ado, I will introduce San. So one of my favorite things to mention when I intro him is this wonderful book that he's got on his background there. So he's literally wrote the book on investing. So he's got the 10 Commandments of Investing there on the screen, which is a Wall Street Journal bestseller, a USA Today bestseller, and just a really thoughtful book on investment principles. He's a passive investor in more than 1,600 doors, including 10-figure commercial real estate investment overseas. He previously ran a private equity fund based out of China and actually ranked top 30 in China. He's deployed a lot of capital in a lot of different investment vehicles, both in real estate and otherwise. And so, just brings a lot of wisdom when it comes to investment. And he's, obviously the sponsor of this 76-door multifamily property we're going to be talking about today in Clearwater that I'm an investor in. And yeah, so that's San, and I'll switch over now and introduce Red Knight and Anthony. So Anthony is partnered with Brian Leonard, who couldn't make it tonight, but just kind of quick background on Anthony. So he graduated from Cornell University. He studied applied economics and management, and then he began his real estate career in commercial real estate about 7 years ago, where he was a vice president for Vision Properties, focused on acquisitions and asset management. And he sourced about $600 million of Class A office assets in that role. And then in 2020, he started Red Knight, which is a boutique multifamily and mixed-use real estate investment and property management company. And they currently have about $50 million in commercial real estate and management holdings. So between the two of these guys, a tremendous amount of experience and expertise, particularly in the Florida market, which we're going to talk a little bit about. I think maybe that's actually a good place to dive in. I know a lot of the folks on the phone tonight are interested in Florida, but maybe let's start there. I would love to open it up and ask you guys, what is it about the Florida market and Central Florida in particular that makes it a compelling investment?
You want to go first?
Oh, okay. I thought we were opening it up to the group. That's okay.
Okay.
Yeah, I'm more than happy to. And San and Josh, thank you so much for putting this together. Really appreciate it and have enjoyed working with the two of you and looking forward to growing our partnership. And thank you, everybody, for spending 8 p.m. on a Wednesday night. Really, really means a lot to me. Happy to go through Florida, happy to go through deal specifics. It's good to just have a free-flowing conversation. For those of you who have seen me present before, pretty much if you raise a hand, I'll stop and call on you. So feel free to just raise your hand in the Zoom if you have any questions at any time. In terms of Florida for multifamily or just the macroeconomic level, as I'm sure a lot of you are reading, many different trends going on in the United States where migration is happening, immigration from other parts of the country. You know, Florida ranks number one and has been pretty consistent for the past 5 years, I would say. So obviously it only accelerated more in 2020 and even, you know, towards the latter end of 2019. And even as we're coming out of the COVID-19 crisis in the US, it's still, you know, it's still attracting over 1,000 people a day moving in to the state. So we really like the long-term prospects of Florida as a state. Obviously, there's no state income tax, and a business-friendly environment doesn't hurt. So a lot of different types of jobs, and you know, Josh did a good job at introing me. But my company, Red Knight, along with Sands criteria as well at Skytan, is, you know, we look for you know, the multifamily asset class, but that has a workforce housing demographic. So we see a lot of, of shipping, distribution, goods and services. We see a lot of, you know, I would say blue collar, middle income type of labor force that we like to target, where we can sort of play in the class, you know, C range, but through a lot of different value add strategies, we're able to, you know, bring up the tenant base and also add value to the exterior and interior complexes, and, you know, basically turn them around to B minus, C plus, and really improve the communities at the same time and provide a good return for us and our investors like Josh and Sam. So hopefully, does that help? I have a few slides prepared as well, specifically to the opportunity that and for full disclosure, we closed on this opportunity in February. So this is not soliciting any investment. This is just kind of talking about what we've done since then. So happy to go through that as well if it helps.
Yeah, I think we'd love to see that. Maybe before we hop into those slides, we could just kind of share a little bit more. San, I'd love to hear your perspectives on the Florida market, and then maybe you guys can talk about how you guys met.
Yeah. So, yeah, I love this. I distinctly remember, Mirag and Winnie we're just recently talking, and you guys are like me, fairly new to the game. I started my first event January 2020, and Anthony and Brian, this is pre-COVID, as you know, they were my first guests. I was just learning. I had not yet joined Sunrock. I was just learning multifamily, and we had an outing with 30 people in the outskirts of Chinatown, Manhattan. Anthony and Brian were my first speakers. So and that's how I got to meet them, these small intimate groups. So it's great to do this, and hopefully we get more of these events, especially in smaller groups where we can kind of get to know each other. But that's how I met Brian and Anthony. I was really impressed with them because that night I actually invited 3 of my really wealthy Chinese friends to come, and they were quite interested in investing. And after Brian and Anthony spoke, I don't know if you remember this, and actually Anthony and Brian actually ignored them after the event. I'm like, what's up? You got investors coming. And they were actually focusing on a bunch of college kids that came that had some questions about real estate. So instead of talking to these 3 wealthy Chinese investors, Anthony and Brian were actually focused on really helping the next generation. So when I saw that, obviously beyond a great presentation, I said, hey, I got to do something with these guys. These are good people. So I ended up being an investor initially in one of their deals in New Jersey, which is also killing it. And then I embarked on the Sunrock journey March 2 months later, and started looking at Florida. And I found the first deal, Hudson Place, which is 44, and decided that, hey, got to get these guys in. And Anthony came in, and I think like 5 days later, they say sharing is caring. You share, you generously comes back. And Anthony said, hey, Sam, we found a deal next doors, right, Laurel Park, which is 32 units, and literally adjacent to it. And we were able to take 2 good deals and make it an amazing deal, right? So So that's the backstory. And Mirak, it's great talking to you. Winnie, it was great talking to you recently. And Sandra Anderson and Jay, hopefully this kind of leads to that type of relationship as it has for me and Red Knight, and obviously with Josh, Brent, and Jim as well in other deals. Yeah. So hopefully that wasn't too long-winded, but I thought that was important to sort of surface how we got together and sort of the character check as well.
Yeah, that's great. One of the questions that I get asked a lot right now, just in these hot market conditions we're in, is how do you find deals? So would you guys mind sharing a little bit more about how you found first the 44 and then the 32 unit?
Yeah. So Sam, go ahead if you wanted to talk about the 44.
Yeah. So I'm still very much a newbie. I joined Sunrock in March of 2020, so this has really been less than a year and a half. And I think just doing a lot of these events, meeting people, talking to people. And for me, COVID obviously is a blessing in many ways, because a bulk of the time I was locked up in Toronto with my daughter, and we were able to co-write this book. And then the rest of the time, when all the scary part went away, I just started driving down from Toronto to New York, where I have New Jersey, where I have assets, and then heading to Florida, and kept bugging Jim and Rena. I made maybe half a dozen trips. I think collectively, it's now about 18,000 miles, just kind of trying to look at every single submarket, and finally found Hudson. I lost the Hudson deal initially. I was second in line. I wouldn't go over the price. Somebody came up, I think 20% higher, but 6 months later couldn't close, couldn't get the funding. And then the broker, Ned Roberts, called me back, and we signed immediately. So yeah, quite a bit of hard work, but it got us there.
A lot of driving,
Anthony,
a lot of driving for dollars.
A lot of driving.
Yeah, and just a lot of driving for dollars, and Sam's really good at that, and that's really but that's really the type of, when you're evaluating opportunities, you're not only evaluating the deal, you're evaluating your partnership. And for a guy like Sam to hustle like that and find a great deal, it's being on the ground. It's very rare nowadays. Everything is trying to be digitized in some respects, for whether it's better or worse. So driving for dollars still works, but at the end of the day, the relationships are what really can make or break your business, especially if you're a multifamily operator looking for opportunities. And the brokers need, you need the brokers in your wheelhouse just as much as they need you as well. So I definitely don't take those relationships for granted. As far as the specific deal in Florida that was hot, Santa's right. It was under contract for, to a different group. And it was funny because I told Stan, I said, I know this group, they're not going to close. And we called the broker too. And I said, this group is not going to close. I knew the woman who ran the group, and she had a pretty bad track record. So that's another thing in the business to talk about later. But I knew she wasn't going to close. So we, as Stan mentioned, we got the phone call, and I think it was about September of 2020 when we officially went under contract. And believe it or not, we actually, as Stan mentioned, found Laurel Park, which is the building just happened to be next door. There's a 44 unit and a 32 unit. And the way we found that was I actually hired an intern, and my intern was just cold calling a list of brokers I gave him, and it actually happened to be a Franklin Street broker who was about to bring it to market, and that's kind of how it happened. So basically, we got an offer accepted on Hudson. We didn't even have a PSA, a purchase contract, signed yet. Like what we ended up doing was we took the risk. We flew down there. We liked Hudson, and basically we asked the broker what the price was for Laurel ahead of time, and we did our numbers ahead of time and booked our flight, and we got down there, and we closed a few months later. So that's, just to make a long story short. So yeah, that's pretty much how it happened. But the moral of the story is patience, 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 especially in this business. So, it's good to wait a couple months to find a really good deal than just, railroad a bad deal that you will regret doing later. The best deals you do are the deals you don't do. So that's something that's kind of stuck with me throughout my career in the industry.
Yeah, yeah, that's great advice, and I think to answer the question, I guess there's no magic sauce here. It's Sam was driving and you were calling brokers. Just continue sort of repeated efforts to execute. Um, so Anthony, maybe now's a good time to kind of share some of the highlights of the deal and the slides you have prepared.
Sure. Yeah, and when we generally have a deal, can you guys see my screen?
Yes.
Okay. So this was actually the investment summary. San and his team really, I put together mine, but San really doctored this up. They did a great job. This was the investment summary we put together on this deal. So as I mentioned, if we go to this slide here, here was the 44 unit property that San found. This is in Clearwater. And then here's the 32 unit property. And if you notice, they shared a property line. So there's actually a fence that we ended up taking down right in the middle. So they literally share a property line. It wasn't, they weren't like right next to each other. They actually, were together. It was never common ownership. This 32 unit property was actually built as condos in the 80s. And then this was built in the 70s beforehand as just regular apartments. So yeah, always been different ownership, but now it's only one owner. So 44 units versus 76 versus 44 is much greater scale. So, that's a huge part of how we were able to add value pretty much immediately for this deal. So Josh, just let me know what you want me to talk about specifically.
Yeah, I mean, maybe this is jumping ahead a little bit, but this deal closed. I think it was in February.
Yeah.
Maybe you could talk about kind of after closing some of the immediate actions that you took, and as an investor, I've seen the updates, and the progress seems pretty incredible in terms of what you've been able to do with repositioning the asset. So maybe you could just share kind of what the actions have been and what how that's shaken out in terms of the numbers.
Yeah, no, I really appreciate that, Josh. So
Yeah, Anthony, I think it'll be important to also share the integrated business model that we're using for this property because it's somewhat unique.
So essentially what we basically, as soon as we closed, we implemented our value add plan already. And this was there's three-pronged strategy to add value. So obviously to improve the exterior, that's usually when we take over a property, we go right away with exterior improvements. So we actually ended up painting. If you see this is Laurel Park. We actually ended up painting that heather gray color and adding, new landscaping, new shrubs, new bushes. There was some other, things we added, like we took down the fence right in the middle. There were some chain link fences too. We replaced with PVC, added a connective pathway. We're still working on seating area right now and signage. But the painting really made a big difference. I do have some pictures, and unfortunately I got to pull them up, but I can do that at another point. Not only just with cosmetic improvements and all the capital improvements that we've started with the exterior, obviously the management's a huge component, and I think Sam touched on that a little bit. We do have a property management team. So when you're evaluating if you're going to be an active, multifamily operator, if you want to manage the properties yourselves and build up a team, or you want to outsource it to a third-party management company. Each have their pros and cons. That's one is not better than the other, so it's always something to evaluate. Obviously, as a passive investor, you don't have to really worry about it. You just really have to trust the operator and sponsor you're invested with. So, it's a different discussion as well. But essentially, there was really no management. There was no on-site management at the property. And obviously, 44 unit and a 32, alone should at least have a super, maybe gets a free rent for his apartment, and they do minor repairs. Maybe they show the units when there's a vacant unit, and they get bonus on that. But there wasn't really that type of staff. It was all off-site, and it didn't really work out. The managers' offices were 30 minutes away. It just never really worked out. So now we actually have an on-site maintenance manager and leasing agent that lives within 5 minutes of the property. So right away, we've added value with just the management inefficiencies. And pretty much going into the property, the rents were extremely low. Let me see if I have a slide with the rents. I haven't looked at this in a while, to be honest with you, but I'm sure it's in there. The rents were very low. I would say the average rent for a studio was about $750, and now we're getting about $900 for a studio for 1 bedroom. I think the average was 800, and now we're getting close to 1,000. And that's a combination of the loss to lease in the first place. Every time we look at assets, and I think there's some comps in here. Let's see, yeah. Every time we look at evaluating assets, we'd like to see where we can achieve rent level wise. We don't always want to be trying to hit rents that haven't been achieved in the market. So we did our analysis and realized that we were well under market. Within 2 minutes of the property, you could see obviously a little bit different product here. It looks 2-story product. Finishes are okay. They look about 10, 15 years dated. But with upgrades that we made, we're able to achieve, actually this one gets 1,200. We're getting those for our 2 bedrooms. I think before they were getting maybe 10, 50 for the 2 bedrooms. So, a little cosmetic work goes a long way. But obviously you need to do your research up front. So we look at all the rent comps in the area. But we only showed 3 in this slide, but we have so many. Obviously we look at the sales comps on the buy, but we can get into that later. Anything else you want to cover, Josh?
Yeah, no, I think that's a good summary. So this may be, this is from memory, so if this is incorrect, please correct me. But I think in your last update, you said you've been able to change over about 25 of the leases so far, 25% of the leases so far. And in that quarter of the ones that you've turned, rents have moved up by something like 25%. Is that right?
Yeah, definitely. So let me see if we have a slide for, okay, here we go. It's kind of tough to see here. I do have an Excel sheet. Let me pull it up. Just so you guys, it's always good to get a visual, if that helps.
Yeah, or maybe even the email would be good, Anthony. The email you sent to investors. It has the summary there.
I actually have something better than that.
Okay, great.
Here we go. Excel. Here we go. Can you guys see? Let's see, new share. You guys see this?
Yep.
Okay. So here was when we evaluate properties, we like to look at downside, base case, and best case. These are the best case rent projections that we assumed. When we did our initial underwriting, our analysis of figuring out, okay, is this going to be a good deal or not? We didn't assume these rental rates were on a pro forma basis. So as you can see, so for the studios, when we acquired the property, the average was about $655. There's only 5 of them. Now we're getting $850. For the ones, average $736. Now we're getting $950. And it just kind of goes on and on and on. So if we can achieve pretty consistently, we would increase the Hudson rents by 33%. And then Laurel Park, here's the rents here. Those would be about 22%. The Laurel Park rents were a little bit higher. They're larger units. There are a lot of, as you can see, 18 2-bedrooms. So if we took an average and if we got everybody's rent up to market, it would be about 27%. When we did our initial projections, we were only thinking we could get like 15%, but we've been kind of blowing it out of the water at this point. And, like I said, we look at price per square foot. We look at so many different factors, amenities. But, the reason why we were able to achieve the rents was because we started the value add business plan right away. And obviously, we're benefiting right now from many different market factors that rents have gone up, within the Tampa Bay and Clearwater area. I think that there was a slide in the beginning. I think it went up by, where is it? Yeah, where did it cost to rent a one-bedroom apartment change the most? And St. Petersburg, Florida, and this was this was basically from COVID till the end of 2020. A one-bedroom, it went up 15%. 15% in a matter of like 9 months. Will the trend continue? I don't think it's going to go up 15% a year, not even close. But I think you're in a good spot to kind of maintain consistent rent bumps once you stabilize the property, which is a great position to be in. So, it was a combination of the market, but forced appreciation as well. And that's just through the improvements we've made. And I wonder if there's, so here was like a typical renovation that we've been doing, and actually we've been putting down hardwood floors here, so it looks actually nicer than this. But like I said, we try to look at where the building's performing when we buy it, and if the building's performing already, great, but how can we add value to it? So we like to consider it as a moderate value add strategy, but hopefully it can produce opportunistic returns.
Yeah, that's great, Anthony. I think one of the things as I looked at this deal with my LP hat on was, what do I like about it? So first of all, I am a big believer in the market. So I think we can talk more about the market if that's of interest for folks. I know most of the people that are currently on the call are already all in on Florida, so I don't want to belabor that point too much. But as an investor, if you're in the right market, kind of the rising tide lifts all boats. That de-risks the deal some. So I was confident in the market. The combination of the two properties, the 44 unit and the 32 unit, provided what was going to be an immediate value add, both in terms of potentially, just the efficiencies of scale of managing 76 units versus the smaller properties, and immediately some cost out, potentially some better management, and maybe even a little bit better sort of multiple on the back end because it's a larger property. So all of those things were easy to kind of see, and then it was clear from this analysis that there was tons of room to move the rents up, and that Anthony and his team had already a very, very detailed plan as to exactly how they were going to do it, which they started executing day one, as you can see here. And so for me, it was the combination of those factors that made this a pretty pretty easy choice to invest in. The other thing I liked, which we haven't talked about, was and I'm not sure if this is still the plan, but I think based on the repositioning of the asset, was a refinance year two. So maybe you could kind of share what that looks like.
Sure. So when we project a investment opportunity, we always, as Josh said in mind, we always have the exit in mind. You have to at some point. So when we're looking at value add deals, we're typically looking at a 3 to 5 year holding period, most likely 5 to be on the more safe side. And what we like to do is add as much value as we can, as quickly as we can, obviously. And if there's enough value created, if you're able to bump the NOI up, 30-40% within a year, which sounds insane, it sounds crazy, but it's been done on multiple deals. And that's not the approach that we take when we underwrite the deal. We want to be more conservative for sure. But if we're able to do that, then we'll be able to, usually we're in a position to either refinance or just sell the property. But if it's that quick, we do like to refinance, which obviously leads to a cash out of some extent. So let's say, it's $100,000 investment, the property appreciated by 25%. We go to the bank and, get a new loan, and we're able to return, let's say we return 50%. So I give you back $50,000, and then we still own the property together and are splitting the profits moving forward. So that's kind of, how we looked at this deal in particular, and kind of how we look at all deals, to understand what the exit is in place. So for this deal in particular, I usually like to see, if there's a way to, refinancing at the end of 24 months, at least half of the capital back. So, using that $100,000 as an example, and then, obviously selling it at, within a 5-year period and kind of sticking to that. There's been some circumstances where, there's a refinance event that takes place where there's 100% return of capital. So you get that full 100,000 back, plus all the, distributions you've got that past year or two. And then obviously profits moving forward. We would potentially hold even longer term. Every time we look at a syndicated investment, we always have preservation of capital and, preserving that principal and protecting it as much as we can. So, what we've been finding is, as long as money is returned within a reasonable time frame, the exit is a little bit more flexible on the disposition side. So that's kind of how we like to look at deals. And, we like to target, a mid-teens type of return. So let's just say a 15% internal rate of return, net, to obviously the LP investors, including myself and San, who are also LPs. We invest in every single deal as well. So, that's kind of how we look at things and evaluate different deals. Every, sponsor's methods are different. But when you're trying to add value and, improve communities, there's a cost of capital to that and a return that has to be generated. So everybody makes out in the end.
Great stuff, Anthony. Thank you.
Yeah. So, congratulations on leading this deal to both of you guys. Clearly, it was a great buy. The business plan is on track, and this looks to be still early, but a very successful investment to date. What else are you guys working on? I know you both have been very, very active in the Florida market. Are there other deals coming up that you can share more about, or at least kind of high level outlook?
Sure. Anthony, maybe we'll come back to the screen. Do you want to unshare that?
Yeah, absolutely.
Yeah. I can take that. I think great questions, Josh and Anthony. Thanks for sharing those details. I think just to add to the Oasis deal, for me, before Laurel, the second deal, when we signed the Hudson, frankly, to Josh's point, I was thinking of this as a 80% sort of rising tide play. I felt that we, again, everybody's here because we love Florida and Central Florida. So I felt that the market itself is kind of kicking up the asset. And then for Hudson and Laurel being next door, specifically this submarket, these two assets were absolutely the ugliest assets in that block. So every place else was kind of higher rents and looking better. So I felt that both sort of the big market as well as the submarket added together. If I bought it and did nothing, we would still hit decent numbers. And then being able to combine the two with the economies of scale, and then with Anthony and Brian's great management skills, we kind of then sort of now supercharged the returns, as well as sort of reduced expenses a lot more than we would have if we're just one of them. So the big picture on that. Yeah, it's going well. It really took a long time to get the first deal. Shortly thereafter, the same broker from Marcus & Millichap rang me up, and it wasn't off the market, but it hasn't been heavily marketed yet, and we were able to lock up I guess third deal if you count Oasis as two deals, and obviously Jim is here, and Josh and I are closing that one in the coming weeks, and then it really made a difference because for the first year, just pounding there, I had no presence in Florida. Brokers really didn't take us very seriously. But once the first deal closed, they actually talk. when I call up Franklin Street, they say, "Oh, you did that deal with with Markets." When we call up CBRE, they say, "Oh, you did that deal with Franklin Street." It started talking. They kind of take it more seriously. So we can't talk about it yet, but Brent's here as well. We hope to be announcing a much larger deal in Jacksonville in the coming weeks. So it would be the fourth deal. It would be the fourth deal in the first half of this year. A lot more. I originally targeted two, but yeah, just great partners and some luck involved, and hopefully we'll do more the second half.
I could just add to that a little bit in terms of new opportunities. It sounds like whatever Sam's got is going to be really good coming up soon. I love the market that he mentioned. In terms of any other new opportunities, in Florida, for us, we wanted to, as Josh mentioned before, we only closed on Oasis in February. So typically, when we're buying in a new market, we like to test it. And obviously we've been through a quarter. We paid our first distribution a couple of days ago. So everything's going well. And, basically the test was proven. So we want to expand in Florida now moving forward. So we'll be heavily pursuing some other assets that make sense soon. So always good to dip your toe in, and if it works, great, and continue to expand on it.
Yeah, and I think just to that point, I started the relationship with Retina as an LP. We're now obviously good friends and co-GPs. Josh started as a LP in our deal in Oasis, and now we're co-GPs. And there's quite a bit of Sunrock guys here. Jim, I'm an LP in one of Brent's deals. And so hopefully, Jay, Sandra, Anderson, Winnie, Joe, Mirak, Florida is actually a huge place. So hopefully we can keep these conversations going and have lots of partnerships with you guys as well.
Yeah, absolutely. Thank you guys for putting that together. I mean, it's all about sharing the experience, right? Because some of the people are there, they see it, the flow of of each deals. For somebody who's actually remote, that's where you need to kind of feel that the area, right? The stock markets, So I'm looking for guidance from all of you that have done some of the deals. We've been talking already about kind of what to expect, what to look for, and how keep partner together, right? Because I think it's based on San, you and Anthony, you guys making a smaller deals, and eventually you guys are gonna grow, right? We will love to be part of that. I think there's a lot of strength in the teams, especially like if you're trying to cover new areas and new opportunities. I know it's a lot of work. Just underwriting, right? And how do you really underwrite the Florida market? Because it's different than Texas, right? Especially us from Samrak's group is you have to kind of be very, very conservative. How do you really underwrite? So I think there's a lot of topics we can talk about in this group and help each other, and then build great partnership. That's kind of where I'm standing, what I'm looking for, because I think there's just a lot more opportunities out there.
Yeah, definitely second that too. And Mirak, great seeing that boat, man. That's nice. That's beautiful.
Hey, if anybody's available in Chicago over the summer, you're more than welcome to visit and sail with me.
Nice.
I told you my daughter's accepted to go to Chicago, so we'll definitely hit you up on that.
There you go.
Yeah.
Hey,
thank you.
It's all about building these relationships, right?
Absolutely. No, that was really good. Anthony, I love hearing your perspective, and San, of course, just fantastic. So much wealth of background here, and Josh as well. Just no, it's a big small world, but lots of opportunities, and I think it's so nice having that open mindset for deals, and excited to launch kind of what we have around the corner as well. But really enjoyed it. I gotta hop off, guys, but appreciate the time.
Hey Brent, before you hop off, maybe just 2 minutes, because you actually, certainly in this group, as far as I know, have done the most deals, LP and GP, and just maybe share a bit more about your best or worst transformation project, similar to what you're seeing here. if you don't mind. If you got
Yeah, no, that's for sure. Glad to. Um, and Anthony kind of mentioned this well, and there's a line between what you're underwriting to where you can actually hit, right? So obviously your great scenarios, if you transform and reduce your NOI, or increase your NOI by 30 to 40%, fantastic scenario, right? But sometimes if you don't know, and if you don't know what you don't know, and that's kind of a hard thing to really understand until you get further down the road. But you can underwrite things and not really understand what is possible and what can happen, right? Hey, we can all hit some double-digit rental growths, and those forgive many sins, and compressing cap rates forgive many sins as well. But I've also seen deals struggle, and especially during COVID, or if there's times of people not paying rents, right? So if people can't pay their rents, then you can't pay your utilities. And if you can't pay your utilities, then they're forcing, kind of threatening you to shut them off, or you're not able to pay your subs. And so, yeah, I mean, you've definitely seen that fall through as well, right? So in an ownership group, the last thing you want is to continually fund your deal instead of it paying you, right? Then you're having to pay it. And so I think just as you're underwriting deals, you're looking at deals, you're talking with people that are extremely experienced in that market, right? You're looking at true comps and where you can realistically take your property. I second that motion too. You want to see it already proven out. So you're not just hoping for what you can do, but you're already seeing, hey, we can hit these rents if we do X, Y, Z. So that's just, I guess, maybe a little background on that. And no, just fantastic. Maybe a teaser for next week. So yeah, excited, guys. Excited. So awesome. Appreciate everybody.
All right, thanks, Brent. Thanks.
Yeah, and I think Brent's going to be on next week, right?
I believe so.
Yep.
We'll be interviewing Brent next week.
Yeah, I think Brent. I've asked Brent to talk. Brent's in so many markets, obviously in Florida, but in other markets, some pioneer markets like Phoenix. And so I personally would like to learn from Brent how he attacks these markets and successfully, right? Many people attack, but not necessarily successfully. You've actually been in quite a few more markets. So we'll have a session on that next week.
Awesome. Can't wait, guys.
Thanks, Brent.
Thanks.
So why don't we open up for any additional questions, either about this particular Oasis deal, anything else for San and Anthony, just open floor.
I'll go. Can I go ahead?
Go for it.
So question for the sponsors and you guys, I think you too, Josh, regarding your experience with property management in the area, in Florida in general, and dealing with brokers as well. Two side questions there.
Maybe if you don't mind just repeating rephrasing the question, Anderson.
Sure. Can you tell us a little bit about your experience with dealing with property management companies in Florida area?
Sure. I guess so again, in Florida, we haven't done too many deals. In the case of, if Hudson were standalone, Anderson, it was a 44 door, it frankly would have been difficult. But even 76 is not considered huge for some of the better ranked property management companies. So that wasn't the main reason why I chose to work with Red Knight, because Red Knight, they also are property management, and they're very good at it, because I saw that from investing in the New Jersey projects. So and they were willing to come into this market. So I think I'm very lucky to be able to do that. And going forward, especially to the extent that Anthony and Brian are also amenable, we've talked about doing other deals together where they would handle the management as well. On some of the larger deals, including the Jacksonville one, we are using we can't talk about it yet. We will be going with a very large property management company that has had some background with that asset in the past. Mm-hmm. So it's really case by case, and Anthony's right. You can argue both ways, but in-house there's got to be trust. I trust these guys, and they also got to be very good, and they happen to be very good. So I'm lucky. Anthony, maybe you can.
Yeah, definitely, and I agree with everything everybody's saying here. On the property management side, yes, well, experiences in Florida have been, even for the 76 units, even if we outsourced the management, it actually would be more expensive because we looked into it than what I'm currently charging the property right now, just because it's still not of significant scale to a lot of management companies. I think one guy wanted like 12%. So, it's kind of in that sweet spot. And, for us as operators, investors, owners of commercial real estate, having the management in-house too, for us, it's not, to be honest, a huge profit center. It obviously becomes a profit center as you're at 2,000 doors, 5,000 doors, etc. But it's more of having the control and making sure the deal performs to your expectations. Because if you're, for a size of, a 50 to 100 unit property, you can find a manager for it. But, I've had to fire third-party managers more than I've had to fire people who I hire. So I'll just put that in perspective.
Yeah.
In perspective. Same here.
Yeah,
right, exactly.
I think financially, one other way to look at it is, so Anthony, Brian, and I, our two companies, we put in quite a chunk of the money. So we are, in my view, GPs first. And if we hire a third party, the third party most likely is not an equity owner, and so that's really their profit center, right? I like this structure in the sense that Anthony and Brian obviously capable, but they're GPs, and I think if you run the numbers, they're not going to lose money as a PM, but if they do a good job as a PM and they turn up a higher NOI, obviously divided by the cap rate, we as material GPs and equity owners make a lot more money that way. And does that make sense? The skin, it just seems it's a very slam dunk calculation, right?
Yeah.
And so obviously if there's no trust in it, and I think they'd be cheating the numbers, then that's a different issue. But we don't have that issue, and they do run it like owners. So I think, to me, so SkyTam and my company will equal GPs, but I'm not part of the property management, so I'm not part of the economics. So I'm speaking purely as a co-sponsor that this arrangement actually does work for me, because I think from their standpoint, they make more money by making less money on the property management, but making the profits flow to the GP side. Anthony, would that be accurate? I don't want to speak.
Yeah, I mean, you never want to be buying deals for fees at all. I see many sponsors just buy deals for fees. But even on the property management side, no one's going to treat your property if they're not an owner the same way you would. We've gotten, creative. We get pretty creative with our management, things that I can't even talk about on here that we've done, that, put us in a really good position to reposition that I think would turn off. Well, like cash for keys. I've hired third-party management companies. They're like, I'm not comfortable knocking on this guy's door and giving him $500 to get out. Like, that's something like we're comfortable with, So instead of waiting 2 months for an eviction and losing out month's rent and probably more damages, we like to control. I think that's what it comes down to.
Right.
And we want to make sure that our investment's performing the same way our investors are going to perform. So all the interests have to be aligned, as Sam said.
Mhm. Yeah, that's great. Thank you so much. Just wanted to say again, I said in the chat, thank you for putting this together, and you guys did a great job with the material, and I'm sure you've done a tremendous job with the property. I love the property, by the way. I love green space. I love to make a commune like a nice living space for people. That's a great mindset, right? I love it. Congrats.
Fantastic.
Thank you.
Thank you. Thank you. Great. Okay. Well, again, we're going to try to do more of these and keep networking. And I'm absolutely sure 6 months from now, we'll be doing some deals together, with hopefully everyone in this group.
Yeah. Very good.
Sounds good
Okay.
to me.
Yeah.
We're in.
Thank you, guys.
Okay.
Nice.
Hey, Josh, thank you so much for being an LP and for hosting this from taking time from Hawaii, of all places.
Enjoy.
Sure thing. Enjoy the conversation. Thanks, everybody.
Thanks.
Okay. All
Good
right.
night.
Have a good night. Have a good night. Thanks, Anthony.
Great night.
Thank you.
Take care.
Yep.
Thank
Bye-bye.
you.
Bye-bye.
Thank you for joining us. Please visit Wizards Institute to access the blog summary of today's session, to learn more about other speakers, and to network with other investment wizards.